We have with us Vijay Valecha, CIO at the Century Financial. Welcome with us, Vijay, as usual. We are aware of the fact that today everyone is keeping an eye on what's happening in the energy sector, specifically what's happening in the Middle East. Before talking about the oil today, let me ask you about the gold. The gold, which is still recording new record levels, high levels, although there has been a very important factor in the trend of oil, which is the U.S. interest rate. Today, the U.S. Treasury bond yields are higher. Expectations of having rate cuts are less. Yet the gold, nothing stops it from rallying. What are the factors that pushed the gold to new record levels?
Well, there are major factors why gold is continuing making new highs. Geopolitical tensions is obviously at the top of it, but that being said, we cannot discount inflation. Inflation is actually always compounded, and as inflation keeps compounding, as we are seeing positive inflation signs coming in month after month, this compounding actually gives a lot of rise to commodities which are more stable, something like a gold, even a platinum or a palladium. These effects on precious metal for the inflation numbers are very justified. We have seen gold is up around 30% for this year. But overall, when you look at it, gold is actually up for almost 30% for almost 2.5, 3 years combined. So that is pretty much an inflationary effect more than the geopolitical tensions and the interest rates that are coming in. We do believe as interest rates continue to fall down, gold will continue to make new highs for the rest of the year as well.
Might we reach $3,000 very soon?
It does look like we should be probably targeting 3,000, if not by the end of this year, at least in the first quarter of the next year. We have seen a steady growth on gold, and actually, that's the most surprising thing is that we have not seen any major falls in gold. Small corrections of around 10% and 5% have been seen on every single new high level, but there's been no meaningful fall on the precious metal so far. And that's what is actually very encouraging that this rally is here to continue.
Will you buy the gold at this level?
Absolutely. We are buying gold at this level. We are recommending buys on gold at this level. It is one of the asset classes that one should be looking at for not just this year, even for next year. Even a target of $3,500 on gold is not far fetched and is actually very, very possible by the end of next year.
If we are now to talk about oil, oil is not moving much today. And the question that we ask today about the oil for many, the risk premium which we had last week has evaporated to a big extent. And today we are at the level of $74. We were at $81 that we had last week for Brent. So in your opinion, the geopolitical factor, will it remain the biggest driver in the coming weeks and months? Is oil considered one of the hedging assets against the risks in the region?
Well, two major factors which are affecting oil prices on the premium side. So there's obviously the geopolitical premium that is coming in, that if the conflict gets much more wider and much more bigger. At the same time, there's also a premium that will have a very fast recovery for China and the economy. Every time that we actually see a big move on the Chinese sector, we actually think that oil is started to recover, and that small correction always does come back on the Chinese economy, and that's where we are seeing oil not being able to take those gains further. I feel the recovery on the Chinese economy is a very big important factor that we have to be continuously looking at for oil to actually get out of the downward spiral and start becoming into a positive side next year. However, that seems quite unlikely in a very short term period of time.
We can see that it is somehow an impossible mission to expect what the price of oil will be. But if we put aside the geopolitical risks and if we put aside the probability that we are done with those risks till the end of the year, where are the prices heading to?
Well, with the supply coming in and OPEC Plus not having a clear path of actually controlling the supply going forward from November onwards, it does look like supply will hit the market very soon, starting from the end of the year. And the excess supply can actually drive prices down even further till $65 in the Brent. That is definitely a possibility, but of course, we cannot ever rule out the other factors that are continuously coming in on a daily basis.
Thank you so much, Vijay Valecha. It's always a pleasure having you with us. Thank you, Mr. Vijay.
Thank you.